in.
That's the new target area for the company, providing motors for electric vehicle 2 and 3-wheelers. But most of the recent debuts on the Lal Street have been muted. Even Sula Vineyards, KFin Technology, and now even electronics, all of them are trading lower than their issue price. Market expert Prakash Diwan is with us. Prakash, you know about the business model. It's an contract manufacturer, so it operates on cost plus, OEM as well as original, now ODM. They're getting into design manufacture themselves. Small company, 1,100 crores of revenues, but margins higher than peers like Dixon as well as Amber. Also, valuations lower. Thoughts on the stock and the prospects over the medium term?
Good afternoon, Rima. So, yeah, I do agree. It's a very distinctly carved out business model. But, a couple of things you need to put in perspective for the pricing of the stock post the listing today. One, that there was an OFS of sorts, and then post this issue, not just OFS, there was a reduction in the holding of the promoters to an extent that's quite low. So market likes businesses which has the majority of the promoter holding here. From that 50 plus neighborhood, it's actually come down to about 37, 38. So it's significantly lower than what a general threshold of comfort is. Secondly, when you start scaling up these businesses, you can't manage to maintain these kind of margins on a bigger scale. So it's unfair to compare it with Amber and Dixon for the simple reason that they have far bigger books that they kind of work towards, and that's precisely the concern that the market would have, that if they were to scale up, can the EBITDA margins remain as strong? And if they were to remain strong, how much scale up can happen? So those chicken and egg questions will probably confound the market for some time. What you do in such cases, it's best to let a couple of quarters, the company run into a few quarters, see what the dialogue is with you as investors, see what articulation they make for the plans that are set out in the IPO, where a lot can change in that. But otherwise, I don't see any reason why you need to kind of jump at it or at the same time not watch it. So it's a good business, but don't be in a hurry to bite it.
Prakash, hi, good afternoon. Craftsman Auto, I think we have discussed this earlier, it's really picking up pace now, right? Almost 3,500 now. Any view on the business?
This is good afternoon, Prashant. So this is a very clearly, a business that's demonstrated its superiority in terms of what it is doing, as compared to, let's say, 6 months back when there were lots of questions, to understand the business model itself. So, hopefully Ellen gets into this stage 6 months down the line. That's exactly what I was saying. When some of these new age business, not new history on the listed space come up, it takes time to this thing. And of course, they've got these acquisitions that's helping them out. They're growing organically and inorganically both. It's a niche business that's fairly large for them to cater to, good headroom for growth. So it has quite a few of those salient. But you could argue on the valuations now that it is stretched, and things could probably look different from a risk-reward perspective and all. But it all depends on what your appetite is in terms of what you want to latch on to as a theme, as a sector. But I think the auto ancillary space will see a huge comeback of sorts. We've not seen that happen throughout 22. 23 could probably be the area where a lot of these innovations will start paying off for some of these players, and they will start getting premium valuations. So wait for that, and this definitely warrants that or merits that attention from a portfolio perspective.
Prakash, I think I remember you telling us earlier this week that for many specialty chemical companies, the orders from Europe have completely dried up. You were talking to a few dealers. Is that?
Yeah.
Am I remembering it correctly?
Yes, you're right, Rima. So in spite of the holiday season, you still have your memory working in your favor. So, it's precisely the end user industry that's kind of languishing in Europe because of various disruptions, whether it's energy issues, whether it's sheer logistics, or whether it's, raw material. Now, what that's leading to is precisely a drying out of that order book, and hence it kind of keeps on working backwards, and people really don't get interested in stocking or restocking. So that's one of the reasons why some of the biggest names like Aarti and all, how do you explain things coming off so drastically for the best of names, right? So that's exactly what's happened. But I think it's probably going to be re-looked at once China starts revving up. So you could probably have a little bit of a counter from there and wait for that to happen to mitigate the effect of the European slowdown.
Just to add that point, earlier today we were chatting with Balaji Amines, and they get about 58 to 60% of their revenues from pharma APIs. And they were saying the demand has dried up. So demand for this particular segment from the pharma companies is down 40% in the last 1 month. And particularly the hit is coming in from Europe. So corroborating the point that you were earlier making, that many of these specialty chemicals have been hit, particularly on account of the pharma demand from Europe being lower. And Balaji Amines quantified it as demand being down 40% for the pharma segment. And this is something even Ather was telling us, that pharma demand has been pretty muted. Prakash, do stay on. We need to slip into a very short break. Market's still quiet, off from the day's high. We are in the red now for the benchmark indices. On the other side, we'll talk more markets, and we'll also invite our alpha manager for the day, Aditya Sood of InCred PMS.